Now, let's consider how you might measure and control product and period costs in a variety of organizations. How would you measure product costs for a merchandiser? Actually, that's a fairly easy question. The resources Home Depot spends to acquire store inventory for resale to customers clearly are product costs. As products are sold, these inventory costs become an expense on the income statement. Well, what about the wages and salaries of Home Depot's cashiers, sales associates, and managers? Home Depot will likely categorize these costs as part of its selling and administrative expenses and treat them as a period cost on the income statement. Now, consider the same question for a large service business like Ernst & Young, one of the largest certified public accounting firms in the world. What are the products sold by this service firm? Ernst & Young sells the time of its tax accountants, auditors, and consultants. The salaries of these professionals represents the cost of its product. These costs are reported as the expense, cost of services sold, in the same period in which Ernst & Young reports the corresponding service revenue. Ernst & Young also employs many other people, such as clerks, secretaries, and office managers, to support the professionals and to administer office needs. The costs of these people are not closely associated with specific consulting jobs. Accordingly, the wages and salaries of these clerks and office managers, along with the costs of office rent, office supplies, and computers, are likely treated as period costs and recognized as selling and administrative expenses on the income statement in the period in which they are incurred. When identifying product costs for control purposes, the most challenging organization to analyze is a manufacturing business. For example, does DuPont purchase inventory for resale? Actually, it does purchase some inventory, such as basic chemicals, but it doesn't simply turn around and resell these to customers. Significant processing has to take place before raw materials become a finished product ready for sale. DuPont must also employ laborers to work with these chemicals, build factory buildings, and purchase manufacturing equipment. DuPont must also employ managers and other support personnel, such as engineers and custodians, to support the line workers' efforts to convert basic chemicals into finished products. These are all product costs. Basically, any cost required to get a product manufactured and ready for sale is a product cost. To help management analyze the manufacturing costs of its products, product costs are divided into three components: direct materials, direct labor, and manufacturing overhead. Direct materials are materials that become part of the product and are traceable to it. Some materials, however, such as the glue and nails in a finished piece of furniture, are so minor and difficult to trace to a specific product that they are not considered direct materials, but rather indirect materials. Indirect materials also includes the materials and supplies used in non-production activities like maintenance and custodial processes. Direct labor consists of the wages that are paid to those who physically work on the direct materials to transform them into a finished product. Conversely, wages and salaries paid to factory supervisors and management, maintenance staff, and factory security guards are treated as indirect labor. Manufacturing overhead includes all other costs incurred in the manufacturing process not specifically identified as direct materials or direct labor. Both indirect materials and indirect labor are included in manufacturing overhead. A solid understanding of product and period costs helps managers better understand and control the costs of providing services, purchasing merchandise, or producing goods. Remember, product costs are inventoried and moved through to the income statement as products or services are sold. Period costs move to the income statement in the period in which those costs are incurred.